Have you ever wondered why so many first-time homebuyers seem to whisper about FHA loans like it's some kind of secret cheat code? There's a reason for that, but here's the catch. Most people don't really understand what it takes to qualify, and that misunderstanding could cost you your dream home. Stick around, because today, I'm going to break down FHA loan requirements so simply, even a fourth grader could explain them back to you. And by the end, you'll know a surprising tip that hardly anyone talks about, but it could save you thousands of dollars. Number 1. What even is an FHA loan? Let's start with the basics. FHA stands for Federal Housing Administration. An FHA loan is a type of mortgage insured by the government, specifically the FHA, which makes lenders more willing to approve you, even if you don't have perfect credit or a huge down payment. Think of it like this. You're borrowing money from a lender, but the FHA promises the lender that if you default, they'll cover part of the loss. That makes lenders feel safer. For example, if you had a credit score in the mid-600s and only a few $1,000s saved for a down payment, you'd probably get turned away for a conventional loan, but an FHA loan could open the door. Number 2. How much money do you need to put down? Here's one of the biggest reasons people love FHA loans. You don't need to save up a massive down payment. With a conventional loan, most lenders want 10 to 20% down. On a $250,000 home, that's $25,000 to $50,000. But with an FHA loan, you can put down as little as 3.5% if your credit score is at least 580. On that same $250,000 home, that's just $8,750. And if your score is between 500 and 579, you might still qualify, but you'll need to put at least 10% down. That's why it's so popular with first-time buyers who are just starting to save. Number 3. What credit score do you need? This is where things get interesting. Most lenders want you to have a credit score of at least 620 or 640 for a conventional loan. But with an FHA loan, you can qualify with a score as low as 500. Though as I mentioned, below 580 means you'll need to put more money down. Here's a quick example. A friend of mine had a 570 credit score after some late credit card payments. She still managed to qualify for an FHA loan after putting down 10%, and now she owns her home and is building equity instead of paying rent. So if your credit isn't perfect yet, don't count yourself out. Number 4. What about debt? Here's something many people don't think about: your debt-to-income ratio. Lenders don't just look at how much you make. They look at how much you already owe. With FHA loans, they're usually okay with a higher debt-to-income ratio than conventional loans. The maximum is around 43%, though sometimes lenders stretch it to 50% if you have other strong factors like a big down payment. Here's an example. Let's say you earn $5,000 a month before taxes. That means your monthly debts, like credit cards, car payments, and your new mortgage, shouldn't go over about $2,150. So if you already have high debt payments, that's something to pay attention to. Number 5. Do you need steady income? Lenders like to see steady, reliable income. Usually, they'll want proof that you've been employed in the same field for at least 2 years. That doesn't mean you have to stay at the exact same job. For example, if you're a nurse and you've worked at 2 different hospitals in the last 2 years, that still counts as steady. If you're self-employed, it's still possible, but you'll need 2 years of tax returns showing consistent income. So if you're thinking about quitting your job to start a business right before buying a house, maybe hold off just a little longer. Number 6. What properties can you buy? Here's something that surprises a lot of people. FHA loans aren't just for single-family houses. You can use one to buy a house, a condo, a townhouse, or even a multi-unit property with up to 4 units, as long as you plan to live in one of them. For example, one client of mine bought a duplex with an FHA loan, lived in one side, and rented out the other. The rent from the second unit actually covered most of her mortgage. That's a smart way to start building wealth while still taking advantage of FHA's lower requirements. Number 7. Do you have to pay mortgage insurance? Here's the part nobody likes, but it's important to know. FHA loans come with mortgage insurance premiums. That's basically insurance you pay for to protect the lender in case you default. There's an upfront premium, usually about 1.75% of the loan amount, which you can roll into the loan. Then there's a monthly premium that depends on your loan size, term, and down payment. For example, on a $200,000 loan, You might pay around $140 a month for mortgage insurance. The good news? You can always refinance later into a conventional loan to get rid of it once you build up enough equity. Number 8. What other requirements are there? FHA loans also have some property standards. That means the home you're buying has to be in livable condition. No big safety hazards like exposed wiring, broken windows, or a roof that leaks. For example, one buyer I worked with found a house at a great price, but it had mold in the basement. The lender wouldn't approve it until the mold was removed. So always get a good inspection and be ready to negotiate repairs if needed. Number 9. What's that secret tip? All right, you stuck with me this long. So here's the tip that most people don't know. Many lenders charge different rates and fees for FHA loans. Even though the FHA sets the guidelines, that means shopping around is critical. I've seen buyers save thousands of dollars over the life of their loan just by getting quotes from 3 or 4 different lenders. For example, one buyer got an interest rate that was 0.5% lower just by asking a second lender, and that saved him more than $100 a month on his payment. So don't assume all FHA loans are the same. They're not. Number 10. What should you do next? If you think an FHA loan might be right for you, here are a few simple steps to get started. First, check your credit score. If it's above 580, great. You're in good shape. If it's below that, consider paying down some debt or disputing errors to bump it up. Second, start saving for your down payment. Even if you only need 3.5%, the more you can put down, the better. And third, start shopping lenders early, even before you find your dream home. Talk to a few and get pre-approved so you know what you can afford. That way, when you find the right place, you're ready to move fast. Number 11. Can you use gift money? Here's a question I get asked all the time. Can your down payment come from someone else? The answer is yes. FHA loans actually allow you to use gift funds from family, close friends, or even charitable organizations to cover your down payment or closing costs. For example, if your parents want to help you buy your first home and give you $5,000 as a gift, that's perfectly fine as long as you document it properly with a gift letter. So if saving up cash feels impossible, talk to your loved ones. You might have more help than you think. Number 12. Are there income limits? Here's some good news. FHA loans do not have income limits. Unlike some other programs that are only for low-income buyers, FHA loans are available no matter how much you earn. That said, you still need to prove that you can afford the monthly payment based on your income and debts. So whether you make $30,000 a year or $100,000 a year, FHA might still be an option if you meet the other requirements. Number 13. How long do you have to live there? FHA loans are designed for owner-occupied homes, not investments. That means you're expected to live in the house as your primary residence for at least 1 year after you buy it. For example, you can't buy an FHA home just to rent it out from day one. But after a year, you could move and keep it as a rental if you wanted to. This is great for people who want to start investing in real estate step by step. Number 14. What are closing costs like? Many buyers forget about closing costs, and they can be a shock if you're not ready. On average, closing costs for FHA loans run about 3 to 5% of the purchase price. For a $200,000 house, that's between $6,000 and $10,000. But here's the cool part. FHA lets the seller pay up to 6% of the price toward your closing costs, so you can negotiate with the seller to cover some or all of that, which can really help you keep more money in your pocket. Number 15. Are FHA loans good for fixer-uppers? If you've been dreaming of buying a home that needs a little love, FHA loans can actually help. There's a special type of FHA loan called the 203K loan that lets you borrow not just to buy the house, but also to pay for repairs or renovations. For example, one buyer used an FHA 203K loan to buy a rundown house for $150,000 and borrow an extra $30,000 to fix the kitchen and bathrooms. It's a smart way to build instant equity and create your dream home without needing a fortune up front. Buying your first home is exciting, but it's easy to feel overwhelmed by all the requirements and options. FHA loans can make homeownership possible for people who never thought they could afford it. But like anything, it's important to understand the details so you can make the best decision for your situation. If you could buy your first home tomorrow, what's the one thing you'd want it to have more than anything else? Leave your answer in the comments. I'd love to hear your dream.